Welcome to the London Business School and to the 7th session in this series, Gaining Ecosystem Advantage. 7, can you believe it? With 2 to go after this one. My name is David Lansfield and welcome to new guests. Welcome to those who return. Great to be with you again. And thanks for all your suggestions that you've shared in advance of this session that we've done our best to incorporate. Today, we're going to be talking naturally about ecosystems, in particular, learning the lessons from the fantastic story of PingAn. Established in 1988, I should say, by Peter Ma. It is transformed from being a financial conglomerate to, in its own words, a technology-powered retail financial services group, straddling lots of industry verticals, auto, health, smart cities, financial services, and at scale. More than 200 million retail customers and close to 600 million internet users. I'm happy, as always, to be alongside my learned friend and colleague, Professor Michael Yacobides of the London Business School, of course, a guru and world-renowned authority on ecosystems, published in all the best journals, including Strategic Management Journal, Harvard Business Review. Welcome, Michael. Great to be with you again. And today with us is Jonathan Larsen, the Chief Innovation Officer of the PingAn Group and the Chairman and CEO of the Global Voyager Fund, which I think says something about its ambitions and scope, I would argue. Based in Hong Kong, coming in from Hong Kong today. And Jonathan is a former senior executive at Citigroup and a consultant at Booz Allen. Welcome, Jonathan. Thanks for making the time today.
Thank you, David. Thank you,
Wonderful.
Michael.
And
so
it's a pleasure. Go ahead, David.
Yeah, so we're going to talk about the growth story, the evolution, PingAn, obviously the role that ecosystems have played, how it's made it work when many others have failed. Today is about giving you, wherever you are in the world, whatever role you play in corporates, consultancies, academia, some tips, some lessons, some insights on how you can build, evolve, change your participation in ecosystems. So, and get ready, please, to answer some questions in the chat box where Michael and I will pick them out as well as we can. What typically happens in these sessions is we have nothing until the last sort of 10 minutes and then a flurry, which is fantastic, by the way, but we don't want to leave you frustrated. So be bold, ask questions right from the off, and we'd love this to be a proper debate rather than just a three-way conversation. I think that's a bit of enough for now in terms of the introduction and what we're trying to do. Michael, why don't you ask away in terms of the questions and set more of the scene?
Well, I think that the first thing that I'd love to ask Jonathan to do for us is not everyone here is based in Asia. So PingAn may be an exotic name that they have heard of. I think that there's a couple of different components in PingAn's impressive evolution. One of them is use both technology aggressively and effectively and think as a nimble entrepreneurial firm as opposed to a firm that only sticks to the confines of what traditional financial service firms and insurers do in particular. The other, which is of relevance today, is that bundled with this is the experimentation with growing beyond the traditional confines and moving beyond and developing such important new areas as PingAn's Good Doctor eventually sort of further spun off. So Jonathan, can you give us a sense of how the ecosystem of PingAn has evolved, and also tell us now, because after a spectacular growth story, you are now preparing for yet another step in the evolution. Can you give us a sense of how the ecosystem of PingAn has evolved?
Yeah, well, thank you, Michael. And I think that it's probably helpful just to give a quick schematic of how PingAn itself has evolved. As David mentioned, the company was founded in 1988, and the first 10 to 15 years you can think of as kind of a platform build out in financial services. Peter Ma is not alone in having had the vision to be able to create an integrated financial services group with multiple platforms that ultimately could be centered around customers. And the first decade and a half really was building those platforms, getting the insurance licenses, making a start in banking, asset management, leasing, etc. So today, PingAn has the widest range of financial services licenses of any other company in China, as an example. Scroll forward to about early 2000s, the company decided to start pivoting towards the customer access of that vision, having built out a range of platforms across financial services, and was one of certainly the first company in China to move to a kind of an NPS vision to start centering KPIs around the customer. Secondly, to integrate all of its call centers and other customer communication capabilities in a single organizational unit called PingAn Financial Services, which still exists to this day and manages all collections, all telephone sales, all inbound calls on an integrated basis for the entire group. And then the third thing was to build databases that started matching customers across the whole group, and using those three things as sort of levers for driving, firstly, cross-sell, but secondly, multi-product relationship development centered around customer needs. Then there's a third phase of the company. So you've gone from a kind of a product phase to a customer-centered phase. And then there's a kind of a, the first step was to move to make a decision in about 1988 to become a technology-focused company. And at that time, very importantly, the world was enduring the global financial crisis. China was relatively unaffected and compensated, through massive internal stimulus, as some of you might recall, in 2008, 2009, 2010. And so the domestic market was largely unaffected by the global crisis. What was happening was the mobile revolution was taking full effect in China at a pace that we had seen nowhere else in the world. And you saw in particular the rise of the tech giants in China on a new scale, really touching almost every single Chinese consumer: Ali, Tencent, Baidu, Meituan, and many, many other names that remain extremely important in the digital economy in China. And Peter looked at this and said, well, this is not only is the analog for financial services obvious, which is that everything we do in financial services is virtual, and therefore ultimately will be replaced by some kind of digital delivery. But equally, there's a new model emerging here, which is that the distribution channels that used to define individual businesses have now migrated to a mobile platform. And so what actually defines the difference between a CD shop and a bookshop and a video rental store, those distinctions just blur. Equally, the distinctions between those businesses and the financial services that power them blur. And you can extend that thinking to many, many sectors of the consumer economy and indeed the economy in totality. And I think this gave Peter an entirely new impetus for how to think about strategic opportunity. PingAn had always been driven by adjacency and the desire to create solutions around clients using multiple platforms. So you could argue that the company was always an ecosystem play, but the technology focus that sort of was the result of the kind of experience of learning from the mobile and tech revolution in China in the late 2000s really has created an entirely different level of impetus. So PingAn applied that in a couple of ways. One was to really apply technology deeply to its own business to show that it could be done. As part of that, we converted the whole company to cloud. And I think to this day, we are the only large-scale financial institution in the world that is entirely cloud-based wherever it is physically possible for us to be. And then secondly, deeply re-engineering and retooling fundamental capabilities. We're the largest car insurer in the world. If you have an external accident in our business in China, you can take out your mobile phone, use our Good Driver app. You can scan the damage. We have an AI engine that will automatically calculate the cost of fixing that damage, either replacing the part or repairing it, labor and parts cost, depending where you are in the country. And for up to a certain dollar or RMB limit, we can settle with you on the spot into your cash wallet with us or with one of the other cash wallet providers, as an example. Or for the agency force, we have one of the largest, probably the largest agency force in the world. We're actually consolidating that and really refocusing it on productivity rather than numbers of agents as we speak. But within that agency force, we try to automate everything in the agent's life that is not productive and is not value added to the customer. If you look at any sales force, you'll find somewhere between 40 and 70% of people's times is spent doing administration and process and all the rest of it. I think for anyone that's been in that side of a traditional financial business or probably any other sales business, that would be very familiar. The question for us was, how do you automate and platformize as much of that as possible? So that was sort of one vector we had. Another was to start building new businesses that didn't naturally fit within the existing structure that we had. A good example, Michael mentioned Good Doctor, which we can get onto, but the idea, this is going now back 8 years, and was saying we're the largest health insurer in the country, but private health insurance is a pretty small part of the overall health wallet. At the time, it was 4 to 5%. Today, it's about 7%. It's growing at 30 to 40% a year. It's going to be an enormous opportunity, but it's still relatively small in the big scheme of things. So Peter's question was, how can I reach beyond that business and redefine my addressable market and, in theory, create a platform that can address every single consumer? And the idea of creating a telemedicine platform was born from that thought process. And today we have the largest such platform in the world with, I think it's 375 million registered users. And just to give it, let me just kind of tie this back to the kind of ecosystem concept. Obviously, when you have a client base today of 224 million financial services customers, that itself is an enormous source of customers that can be referred into a new platform-based business like Good Doctor. So to actually catalyze the business, we were able to really tightly weave it into the life insurance, health insurance value proposition, and then more latterly, the bank proposition and other sort of large client bases within the group. And they fueled the growth of the company. Now we're finding it actually works the other way. Now that that's a standalone entity, we track rigorously the percentage of customers that come from the broader ecosystem. And I think, David, you mentioned we have over 600 million internet users. It's actually 634 million as of the 30th of September this year, against 225 million, I should have said, financial services clients within the group. This is at the customer level. And we're now finding that 39% of all customers that we acquire actually come from the broader internet ecosystem, that is, acquire within the financial services business, as an example. Let me stop there, but I hope that gives a bit of a flavor of the evolution of the company and how the thinking has worked.
Couple of very quick things before delving into some of the how questions. One of the things that I hear you say, which is really interesting, and a contrast, I was just working with a large financial services company before we started this call, that says, well, okay, I will start by broadening out my scope. I think that what is fascinating in the story of PingAn is that it's almost bottom up. So you're starting by fixing the underlying technology, the scalability, the potential information about cross-selling and the other opportunities. And then you take advantage of the opportunities of the unexpected, perhaps, homogenization and reduction of boundaries between different sectors as you enter in. But I think that it's interesting that you guys start by looking at the product, if I understand it right, fixing the product, fixing the infrastructure, and ensuring that once you have that, you can see how you can leverage it. And I'm contrasting that with some of the more late movers that say, I'm going to make an acquisition, I will as such cover a broader range, and I will call this an ecosystem, which, especially for financial services companies, is always a significant risk. What I heard you say as you were explaining this, sort of almost bottom-up evolution of the company as it is, moving to solidify its technology, having done sort of the footwork before and then broadening it up, is that you said that about 10 years ago, the similarity between sectors started changing, and the distinctions, the boundaries between sectors that perhaps used to be more heterogeneous started going down. Now, there can be a couple of reasons why this happens. First, technology and information becomes a little bit more fungible and is the same across different segments. The second, that regulatory barriers may be removed. The third is that customers are more open to have needs covered by companies that existed in different verticals. And now we are more open to entertain the possibility of this need is being covered. And, perhaps a fourth thing is that we're now seeing what, I'm recently dubbing a free-form competition, i.e. a more explicit focus on creating packages which make sense as a package. What played the role as you decided that you want to move beyond this solid foundation and onto these markets that you were saying? Was it that, you know, IT made it easier and it was sort of more fungible between segments? Was it the technological boundaries were going down? Was it a customer willingness to entertain it? Or was it all of the above? What is it that drove it? And then I'm sure that David is going to start us off in thinking about what did you do to make that happen?
Yeah, well, I think first of all, it starts with being an entrepreneur-founded company, a founder-led company, and I think that the starting point that, you know, as a company, part of our mission and our mandate is to continuously create new businesses, to be always creating and always transforming. That mindset is at the beginning. Another mindset that's very important is that, you know, wherever we are, we're just at the cusp of our opportunity, and there's always a bigger play ahead of us. So that's another mindset I think is very interesting in this company, and it's quite different from other companies one might think.
Keep yourself hungry.
Indeed. And then, you know, I think the idea that I think the technology kind of insights that emerged with, you know, the advent of the iPhone and the lookalike products, the Android products, etc., and with the unprecedented rise of mobile in China, and the rise of the internet giants on mobile, the rise of mobile payments, of course, is a unique thing in China, which have completely displaced cash, as anyone who knows the China market would be aware already, and did so very, very quickly, much faster than we've seen anywhere else in the world. I think those conditions sort of, I think, created a new impetus. I think the transformation initiatives for the existing businesses were, you know, in some ways, a desire to exploit the possibilities, but we're also very much driven with a competitive mindset to kind of strengthen our consumer value proposition, and also to become fundamentally more competitive as an organization in the use of technology and viewing technology as a fundamental enabler for everything we do. And then I think it really was, I don't think there's in the new businesses that PingAn has created, it wasn't really a fundamental shift, because PingAn has always created new businesses. And we have 37 companies or businesses at the first level in the company. All but 2 of them have been entirely created internally and organically. I would describe the strategy, yeah, bottom up is one way. I would describe it as an organic strategy and very much an adjacency strategy. And think of adjacencies as customer adjacencies, product adjacencies, and capability adjacencies. And all 3 are critically important.
That's pretty rare. I mean, there's so many things that are breathtakingly impressive, I have to say, in terms of the ambition, the scale, dynamism. The organic story is relatively rare in my experience. Point one. Secondly, if I had a pound or dollar or whatever, any other currency for every time that somebody said, we want to, you know, create an opportunity to deliver against our customer needs, customer centricity and so forth. We want to build an technology engine to support it and so forth. All the themes that you sort of talk about. I mean, everyone's trying to do it. But then you get to actually, okay, we've got the right mindset. We think we have the right mindset, which most corporates don't. That entrepreneurial, let's keep moving, that momentum you referred to. But then there's a gap between intent, right, and ambition, and then the execution of it. And if you plot the chart, and I've done my homework, you know, you plot the chart of the evolution of PingAn in terms of timings and the scale up, it's quick, right? And you're a very dynamic organization. To build on Michael's point, what are the steps within the organization to grow organically and at pace and successfully?
Yeah, well, I mean, part of it is being in a growth market. So in some ways, the businesses that PingAn has succeeded in, you know, represent the growth of China itself over the last 33 years. You can be the largest auto insurer in the world today. You know, in 1988, there were barely any private cars on the roads in China. So the opportunity to be that simply didn't exist at that time. And I think PingAn was pretty good at stepping in and quickly adapting and quickly becoming a market leader. It's very interesting. The competitive landscape in China is ruthlessly competitive. In the financial industry, we're up against entirely state-owned companies, because PingAn is the only non-state-owned large regulated financial institution. I guess you could argue Ant Financial is a non-state-owned institution as well. Maybe it's increasingly state-influenced, but it's certainly a non-state-owned institution. But it's of a very different character. It's also quite a successful company. But for the overwhelming part, we are competing against state-owned enterprises whose management changes every 5 years with the planning cycle in China, and who are by no means stupid companies. They're very capable companies, but they tend to be much more market share and volume focused, much less focused around customer needs, customer service, client segmentation, value proposition, and much less focused on profitability. So PingAn focuses on all of those things against a bunch of competitors that are just ruthlessly focused on share and volume. It's not the easiest game to play, but PingAn has been pretty successful.
Let me try to drill down on that a little bit, though, because I think that David's question remains. I totally see the benefit of being much more value proposition, adjacency, value to the customer. But the question is, how do you do it? In the sense that I hear many financial service companies that absolutely have got the rhetoric right, and they've got the consultants that tell them that this is the rhetoric to keep, and that we need to be, both creative and strategic when it comes to consumers. And of course, you look at the delivery, and it's a very different business altogether. As you are thinking about ventures in adjacencies, what most companies do is that they have a bit of a sandbox. There's a few million here and there, and they fund some people to do their fancy stuff, and the fancy stuff goes in glossy annual reports, and everyone's happy that it's an innovative company, and we have paid our lip service dues to the gods of innovation and would like a higher multiple. Thank you very much. And I think this is a slightly different picture with the one that David mentioned, which is experiment and then grow at scale. Now, this does not happen by itself. So can we go into what you think part of the secret sauce of not only talking the right talk, but walking it is in your experience?
Yeah, well, I can give some examples of, I think interesting ways PingAn has thought about building out businesses that might be, I think are quite different from what I've seen elsewhere. So I mentioned in our auto insurance business, we have an app called Good Driver. And we have, as part of that, an automated claims solution that we built in-house. And the core of that automated claims solution, as one example, is a capability adjacency. So we got into building our own facial recognition about 6 or 7 years ago. We hired a bunch of CMU, Carnegie Mellon data scientists, and got them to actually build financial institution grade facial recognition, before Apple had it, by the way, using as reference images the government ID database, which you can access by API in China and many other countries, by the way. And we got the same guys to then, once they've done that, to start looking at other use cases. And we got them to build this auto damage and loss assessment recognition platform. So we built that in. Then we decided, well, we want to have another platform which actually measures driver risk. It gives you a driver risk score. So we got the same AI guys to work on that in conjunction with a bunch of other developers within the firm. So now you've got a loss assessment, a claims management platform or claims assessment platform. You've got a driver risk platform that uses your mobile phone to assess how risky you are as a driver. It turns out that the accelerometer and gyroscope and GPS in your mobile phone are unbelievably sensitive. And we know when you're getting out of the car, because we can see the rotation of your phone. We know when you're accelerating too fast, braking too hard. We know when you're across the line. We know when you're on a dirt road or a hard road. You opt into this program, by the way. We're not imposing it upon anybody. But and then we put those two big apps within a much, much bigger, let's call it, ecosystem of other driver-related services, whether it's driver clubs, whether it is auto repair discounts, whether it is petrol discounts. You can imagine the kind of thing. It's a very rich platform. And then we said, well, let's give this to our motor insurance customers. Of course, we have a co-brand credit card with our bank for our driver population as well. And it turns out that our auto customers are amongst the lowest risk and most loyal and profitable of the customers we have there. But we then said, well, hang on, now we've got this platform. Why are we limiting that to our own customers? Why don't we flip it around and direct it to the outside market? And so now 60% of the customers of that platform aren't even our customers, but they're a very, very important source of customers. So if Michael were to sign up to our driver risk program, we can now assess you for your driver score. We know exactly how risky you are. We know exactly what car you drive. We can become very, very competitive to give you an offer and bring you into the fold. And that turns out to be a whole strategy by itself. So it's a very, I think that's a very interesting example as to how PingAn thought about it. Did that all just come up in one? Did all of that arise from one brain spark? Absolutely not. It's very evolutionary, piece by piece. Even each of these capabilities I described had hundreds of iterations where the senior managers involved, including our chairman, Peter Ma, for some of them he was personally involved in it, would actually be involved in maybe 60, 80 iterations of micro details in these applications to get them right, to get them to work. So another one is recognizing that innovation is very rarely about just a big idea. It's far more about being able to execute that idea, to iterate it, to sort of work it into something that can finally find its product market fit, and then having the patience and the endurance, the stamina to be able to see that through. I'm sure we've seen in some companies, and maybe part of the problem both of you guys are describing, the senior management get bored with this pretty quickly, and they say, "Come and see me in 6 months with the finished product." Well, it turns out if you do it that way, the chance of that finished product actually really fitting the market and really being competitive and productive is are pretty low.
I think that's a remarkable story. I mean, that sort of, they may look to leap, if you like, too big and place one big bet. Rare that some of the top team actually get immersed in the detail that you referred to. And I guess being a founder entrepreneur is different in mindset to some perhaps corporate executives. I'm not anti-corporate executives, by the way, but those are some of the features. We have some great questions, so Jonathan. So I suggest we're going to do a bit of a quick fire round, given timing, and we want to make sure our guests are suitably sated in terms of their questions. In terms of the portfolio, a very large portfolio that you're leading there. The two questions I just want to draw out. One from Aaron right at the beginning was around how do you manage not only the bundling that you talked about and everything else, but also the potential cannibalization. So within the portfolio, that's one question. And then as you're building, I'm looping these together, not a beautiful link, but I'm trying to link them together. The second one would be, as you're evolving the portfolio, you've been talking about China, of course. How much do you see the possibilities and how far do you see the possibilities outside China and some of the challenges that come with that expansion? So first is sort of cannibalization within the portfolio. And the second one is how far can you go and how far do you want to go geographically? Yeah.
Well, look, I think that the first thing is at one level, you have to be willing to compete with yourself from time to time. I think if you're stuck with the idea that undermining your own core is just a no-go zone, it's very unlikely you're going to create breakthrough solutions or platforms. And I guess the important thing is to have decision logic that prioritizes, when and how you should do that. And to me, the question is, I can give up half my margin for a group of my customers, but if I'm going after something that's 10 or 50 times the size of the addressable opportunity that I have today, then that makes perfect sense. So it better be 10 or 50 times the size of the addressable opportunity, and you better go and deliver that. And that's the kind of trade-off that we consciously think about all the time. So, having the eye on a bigger prize. And, of course, if that's not going to be the case and we're better off keeping the model we have, then the question is, how do you strengthen that and make it defensible against possible competitors that might do the same thing?
You're considering those trade-offs all the time. You're making hard decisions and you're willing to leave things behind as you're looking to scale or stick with them if they're doing really well.
And sometimes at the early stage, Peter is the master of having multiple teams working on the same problem with different axes. And he's not sure exactly, what's the right path. And he'll see which one looks like it's going to succeed. And then you'll find the organization changes over a weekend, and teams will be slammed together, or one will be discontinued totally, and the team will regroup onto something else, and a new form will emerge that is the next iteration. So that's a very normal thing at PingAn. On the international, look, we are I think firstly, we have enormous continuing opportunity in China. I mean, the company generates an ROE of about 20%. And look, COVID has not been an easy period for us. And, we grew profit at 9% over the last 12 months. The company historically has grown at about 25% compound for the last 32 years. So, this is a slower period for sure for us. A lot of different factors that we probably don't have time to get into here. But, I think the company is sort of extremely well placed. But there's still just enormous opportunity in China. And to compete with that 20% ROE, it's, whatever we do internationally has to be a pretty high return opportunity. Our thinking is that it's better to be capital light internationally. It's better to use our technology. And it's better to be able to support other financial institutions and to create platforms that can be successful internationally. One example is our OneConnect platform, which we've started marketing in Southeast Asia. We've got an excellent CEO who's actually building quite a nice business across the region in providing financial services platform infrastructure for financial institutions across the region. Leveraging the whole premise of OneConnect is we built all these platforms and tools to solve problems for our clients. And then we decided to platformize them and make them available to typically smaller banks within China, of which there are hundreds. And we're now doing the same thing in Southeast Asia. Another example might be we have an investment in one of our portfolio companies in the US called Snapsheet. They're the largest new generation claims management provider for the auto insurance and P&C insurance industry generally. I think they have 7 of the top 10 insurers in the States as their clients. We are in the process of helping them incorporate our auto claims platform into their workflow. It'll be the first time that has been done in the United States, and immediately gives us access to the top 7 of the top 10 players in the States. That will be hosted on Amazon, completely separate from PingAn, and will be a platform that obviously will be somewhat customized for Snapsheet's use. So there are a couple of examples of some of the initiatives we have underway internationally.
Great.
So let me turn to a different question, and I'll tag on one of my own here. So Dimitris Velmakos is saying, excluding distribution, are there any initiatives that particularly stand out and contributed to PingAn's success, e.g. operating platforms, infrastructure, products, organizational structure, culture? And to that, let me just add, because again, I think that an important part, and perhaps I'm drawing on our earlier conversations on that, Jonathan, is the tying the ambition, especially as we move into new markets and build these ecosystems, to have things that are concrete and measurable as something that drives success. Because sometimes, again, you see organizations that say, well, if that's new and lofty, how would I do anything other than saying experiment? But I think that the approach, as I understand it, PingAn is a little different. So first this question, and I suspect that it'll be a natural lead on to some of the way that things are organized, seen, measured, and assessed, even as we look at innovation and things that may appear very experimental.
Yeah. So, well, I think probably like a lot of Chinese companies, PingAn is, ultra KPI driven. And I think that's been a pretty good discipline. I think if you look at our CFO, Jason Yaobao, he spends the majority of his operating time, doing KPI discussions and reviews with the operating businesses at, very, very granular detail. It's, it's kind of a say-do type of analysis. And, we want to understand whether, if businesses are promising to do something, are they actually doing it? So, I think that really gives rise to a rigorous execution culture. And of course, metrics is one side of the equation. You actually have to deliver and deliver well under that. And, inevitably in any big organization, you'll have some people who are just very good at managing the metrics as opposed to the substance. So, they probably don't last that long in PingAn, I suspect. But you always have to be guarding against that. So that's one. Another one is, you mentioned, innovation sort of metrics and goals. Well, we leave those pretty open-ended. The businesses have to put up goals. They have to be meaningful goals. They don't have to hit them all. Not everything has to work. Part of innovating is that you're going to have a lot of things that don't end up working. But, it had to be worth working for. And once you realize it's not going to work, you have to pivot and shift. If you have 3, 4, 5 initiatives, we do expect a few of them to work, and we expect them to move the needle. So I think that's very much part of the culture in the place. Of course, it depends on the strategic position of the business and whether the ground is shifting and a new model is demanded by the marketplace anyway. And lastly, I would say that I think PingAn has a very interesting new business creation model, which is very much to start up new enterprises as startup companies with entrepreneurial management, with a startup culture in startup looking premises, startup dress code. No one would ever fly business class. Pennies are pinched deliberately. And the idea is to really create an entrepreneurial mindset and to give the founders meaningful equity, and typically to bring in outside shareholders pretty early on the basis that they create an entirely different accountability. And as the company raises capital from, of course, PingAn and from other shareholders, that those financings represent kind of valuation benchmarks for enterprises that would otherwise just get lost in the noise in a big company like ours.
On the point of, I guess, the culture and the structure of the organization, I'm curious as to sort of get a even clearer picture of the relationship between the center, if you like, the top team, and whether it's the operating units, the startups that you just referred to, because there obviously is a shift in many high-performing organizations toward more distributed responsibility, which sometimes loosely people forget that comes with the accountability you just referred to. And it sounds like a high-performing, if ruthless, culture at PingAn, which I guess is a necessity for growth. How would you describe the center's role, if you like, in the evolution of PingAn and the future, and the relationship with the entities, if you like, within the group?
I don't think it's a ruthless. I think it's a demanding culture and a disciplined culture. Look, if it's not going to work, then you're going to have to go and get another job somewhere.
Yeah.
And
I think that's a good thing. Yeah.
It's no. You and I have worked in consulting in our lives, and all consulting firms are up or out. Otherwise, they wouldn't exist for very long. Yeah. And it's just clearly understood. You're either performing or you move on. It's as simple as that. And I think it's exactly the same at PingAn. So I don't think it's a kind of a ruthless culture. I think it's just a disciplined culture, and it's a performance culture. I'm sorry, what was the second part?
And David? It's just more about and yes, I agree with you. I used the wrong term, but I agree with you wholeheartedly. And we've both been in the same culture. The second question was more about the relationship between, if you like, the center, the top team, the people you referred to, Peter and so on, and then the degree of empowerment, the degree of accountability between the two, because there are different models, right? Very hands-on, very directive.
I think we have very different models as well. There are some businesses where we've got, a good model in place. We've got management that are able to drive the next couple of iterations of the business. We've got strong capabilities embedded within the business, and central management really don't need to get that involved at all. The last thing they want to do is have to get involved. There are other businesses where there's a big strategic challenge, and the answer is not totally clear. We know the business has to shift, and we might have made some management changes. We might have brought in new capabilities, and there's going to be a fair bit of interaction between central management and the business management to really iterate and figure out how it's all going to work before that business is then set again on its path to be very autonomous. And then there'll be other development projects where Peter himself will be personally involved and extremely interested. We'll be involved in those 60, 100 iterations to get something to minimum viable product and get it out into the marketplace and get it to work commercially. So again, there's not one model at all. It's a very wide-ranging, and it's kind of matched in our technology organization. You know, when we did the cloud conversion, there was a lot of centralization, but we realized equally that, you know, in many cases, it's much better for the business to be wholly autonomous for their tech, and indeed even within the organizations to move to a DevOps model where the managers have their own tech resources and are able to sort of release code, you know, on a continuous basis, very much like an internet company. But you know, in other cases, there are central capabilities that all the businesses can draw on, like advanced, like visual AI or natural language AI. It doesn't make sense to have those in 20 places across the company.
Let me try to push a little bit more on this one. And I'm going to contrast what you're saying with my experience a couple of years ago with one of the largest insurers in Switzerland. And they have set up their ecosystem. They're very sort of proud of that, and, you know, bought some other businesses then saying, look, you know, we bought the biggest mortgage broker. And I then remember speaking after speaking with the board, speaking with the people in the senior management team, and the chief technology officer said, look, you know, I deploy about, you know, 200-300 million every 4 years to upgrade my systems. But we've got a super tanker and a speedboat. These people doing the ecosystem, they're doing the speedboat stuff. I need to make sure that I've got the tanker going on a safe course. So it is sometimes one of the challenges, especially when you think about these new businesses, is that there is a fair amount of inertia in the core of the organization, even as there is experimentation on the sides. Now, my concern with that was that you're not going to see any benefit if you don't think about the integration. And part of the answer that you might give is, well, our technology is sort of more flexible, and one of the reasons of putting having a more agile cloud-based model is that it makes it more interoperable with all the other things that we're doing. But how do you avoid the lack of cohesion of these more entrepreneurial activities that may happen in the periphery, and part of what is inevitably a scale-based business with a massive presence, because you are a giant, you know, the most valuable insurance firm? That means that you also need to be thinking about the operation at scale and at a reasonable cost. How do you manage the tension between this experimentation and the connection that sometimes big companies don't get so right, and you seem to be managing more effectively?
Yeah, I'm not sure that we would accept the premise that you have to have one single culture across the place. I think maybe at one level, there's a set of shared principles and values and expectations that you have to create that are genuinely group-wide. But I think if you're in a kind of a new business that's really bootstrapping itself versus in a business like Life or P&C, obviously you're going to have very different challenges. Mm-hmm. And that's going to require different skills, resources, management models, and part of the culture for sure. So the key is, you know, how do you avoid dissonant culture or just unproductive cultural conflict? That's one thing. Another point you make, I mean, of course you have, you know, if you have one of these very large, very profitable businesses, PingAn is generating basically 20% ROE. You don't do that for, you know, just by sitting around playing tiddlywinks together. You do it because you've got these massive scale businesses that are driving just a huge earnings base and have extremely efficient capital utilization. Of course, you have to be managing that, and you have to be sustaining that, and that means you have to be, you know, relentlessly focused on cost efficiency, on cross-selling to clients, and you know, maximizing the opportunity to fulfill client needs. But it also means it doesn't in any way stand in the way of, you know, constantly asking the question: are we differentiated in our value proposition, our client experience? Are we segmenting what we offer to make sure we're addressing you know, multiple and distinctive needs groups within our client populations? And ultimately, are we competitive?
In less than a minute, I'm just repeating the question. What is PingAn the biggest threat, risk, challenge, and or you're concerned about the attention and scrutiny in fintech from that is now becoming a concern?
Look, I think there's been a lot of discussion about the kind of regulatory changes in China and various policy initiatives that have been announced. In financial services, they're mostly pretty positive. which is protecting customer privacy, which is extremely rigorous within regulated financial institutions. Number one, I think trying to create a level playing field between the new generation of internet providers and traditional regulated financial institutions. I think that's generally a very positive thing. I think more broadly within the economy, the focus on competition law and trying to pare back monopolistic or dominant providers in certain sectors probably will pay dividends to China over the longer term in terms of economic productivity for the country. For us, we still have a huge growth path in financial services. Something we haven't spent a lot of time talking about that's very interesting for PingAn is health. China spends today $700 per capita on health. You would know that the US spends about 11,000, 12,000. Most developed countries are not quite up with the US. They're spending 3,500 to 5,000. Whichever way you think about it, China is looking at 5 to 7x over time, simply to get to parity with the developed countries of the world in its health system. It can't do that the way the Western health system's developed. It's going to have to use technology in a smart way to get there faster and sooner. And we see that as an enormous opportunity. And in fact, in the eyes of our chairman, Peter Ma, the health opportunity may be even greater than the financial services opportunity over the longer term. So that I think I would leave you with as our sort of single biggest future opportunity.
I love the optimism. I love the framing around opportunity. It's been an enriching, stimulating conversation. We've covered a huge amount of ground. What I particularly like is the getting a window into how things really work within the organization, which I particularly valued, how decisions are made, how you experiment, how you scale, how you move things on, how the culture works. We've probably still scratched the surface, but from a personal level, Jonathan, I'm very, very grateful for your time. Michael, I think it's been a wonderful conversation, don't you?
Absolutely. And Jonathan, there's more questions, anywhere from how do you create stickiness to how do you set your future plans that we'll have to leave for another day. But thank you so much. Terrific discussion.
And thank you, Michael. Thank you, David. It's been a pleasure.
So this recording will be available, as Sam's put on the comment box. There are 2 more sessions to go in this series, so do sign up, share your ideas, your feedback, and I'm very grateful for everyone's attention, interest, and questions today. Have a great morning, evening, afternoon, night, wherever you are in the world. Thank you.